Hi everyone, I'm Roy, and today I'll be talking about Ethereum and the Ethereum Improvement Proposal EIP 1559. I will go over the following in this video. Firstly, the overview of Ethereum, EIP 1559, existing fee model versus the proposed one, effects of EIP 1559, and why miners will still be earning a lot. Ethereum is a software running on a distributed network of computers which ensures that smaller programs called smart contracts are replicated and executed across the network. Given the decentralized nature of Ethereum, there is no central server. In short, Ethereum is a cryptocurrency that doubles as a platform on which you can build decentralized applications, also known as dApps. dApps built on Ethereum are similar to those you find on your computer or on the internet. The difference is that the applications built on Ethereum are decentralized. They are not kept on a single computer or server. Instead, applications on Ethereum are stored across the multiple computers that are connected to its blockchain network. This means that it is virtually impossible for any applications made on Ethereum to experience downtime. It also makes it hard for regulators to restrict access to them or shut them down. In addition to applications, Ethereum allows you to create digital tokens easily. Instead of building your own cryptocurrency from scratch, you can use a sort of template provided by Ethereum. This template is called the ERC20 standard, and over 200,000 different tokens have been made on Ethereum so far. Most importantly, almost the entire decentralized finance space is built on Ethereum itself. The DeFi space consists of a couple dozen applications that let you do things like trade, lend, and borrow ERC tokens without a centralized entity like a cryptocurrency exchange or bank. The ERC token is used to pay for Ethereum's network fees known as gas, and this is measured in a unit called Gwei. As demand for tokens and applications grow, so too does the demand for ETH. The fee structure and what changes EIP 1559 will bring upon Ethereum will be discussed later in this video. What is the issue with Ethereum currently? Obviously, it is scalability. There is a reason why Ethereum is the second largest cryptocurrency by market cap. It sustains the largest ecosystem of applications in a cryptocurrency space. And over half of the top 100 cryptocurrencies are built on the Ethereum blockchain as ERC20 tokens. Tens of thousands of dApps competing with each other for computational resources, billions of dollars of stablecoins being sent, yield farmers, and also users competing with each other bidding for gas prices. Takes forever to confirm. Now let's talk about the proof of work consensus. Ethereum can only process 15 transactions per second. In Ethereum, aside from fees given by users, new ETH is given as a reward to miners who dedicate their computational power to verify transactions by solving cryptographic puzzles on the Ethereum blockchain. This is called proof of work mining, and it is the same mining process used in Bitcoin. This will physically cap the amount of transactions per second that ETH can process. Now, Ethereum will soon transition to a new consensus mechanism called proof of stake, and that is much more scalable and affordable, which is also used by Polkadot and Cardano. But as you all may know, for new things to be implemented by Ethereum, it will take a certain amount of time. There are already layer 2 solutions to the scalability problem, and I would not go over that in detail as there are many videos out there with lots of coverage on this. However, I will be talking about the solution to volatile gas fees. Before I start talking about the EIP 1559, I want to let you know that EIP 1559 will not make gas fees lower. Before I continue, if you would like to see more content like this, please consider leaving a like and subscribing. EIP stands for Ethereum Improvement Proposal, and it is a common way of requesting changes to the Ethereum network. An EIP is a document covering the various aspects of the proposed change. EIP 1559 outlines changes to the Ethereum fee model, and it will be packaged with the London hard fork this coming July. Before we talk about the changes, let's go over how the current fee model works. The current fee model is based on a simple auction mechanism, also known as the first price auction. The users who wants to have their transactions to be included in a block have to submit a fee, also known as a gas price. A miner will decide whether to process that transaction depending on that price. Individuals who submit their transaction with an average fee just before a spike in gas fees may end up waiting for their transactions to be confirmed for an extended period of time. This is of course not ideal from a user experience point of view. The miners are obviously going to pick the transactions with the highest gas fees first. This usually results in users overpaying for their transactions when there is high demand. Now let's go over an example of the current fee model. Imagine the minimum gas fee to be included into a previous block was 25 Gwei. The network activity seems to remain the same, so users start submitting their transactions with 25 Gwei trying to be included in the next block as well. However, simultaneously, a new extremely anticipated token is launched, causing users who want to buy it to increase their bids dramatically. Now, to be included in the next block, the minimum required fee is now 50 GUI. If the network activity remains high for multiple subsequent blocks, the users who already submitted their transactions with 25 GUI may wait for their confirmations for an extended period of time. In this case, the block size is capped at 12.5 million gas, and the only way to get into a block is to bid higher than the other. This is why EIP 1559 was introduced. EIP 1559 introduces a new concept of base fee. The base fee represents a minimum fee that has to be paid for a transaction to be included in a block. The base fee is set per block and adjusted higher or lower depending on how congested the Ethereum network is. The next big part of EIP 1559 is an increase in the network capacity. Two values replace the current gas limit of 12.5 million. Firstly, a long-term average target for 12.5 million and a hard per block cap of 25 million. This means the network aims to achieve equilibrium at 50% capacity by adjusting fees according to network utilization. EIP 1559 also introduces a miner's tip, a separate fee that can be paid directly to the miner to incentivize them to prioritize a transaction. This is very similar to the current mechanism where higher gas fees can incentivize the miners. This feature is crucial for transactions that take advantage of quick confirmations, such as arbitrage transactions, which we will later discuss in this video. Now let's go through a quick example to see how the EIP 1559 fee model compares to the existing model during a period of high network activity. So let's say in the previous block, 25 GUI was the base fee and the network utilization was at 50%, with most blocks using 12.5 million gas, half of the max gas limit. A release of a new token will result in a spike in demand, resulting in transactions with higher miner tips. The miners can then produce a block with a max gas cap limit of 25 million to accommodate the increased demand. This results in more transactions being included in the block, but it also causes the base fee to be increased in the following block, as the current block is 100% complete. If the network activity and demand for block space remains high, the miners will keep producing full blocks, increasing each subsequent block's base fee. At some point, the fee would become too high, leading to a decrease in demand, causing the network to start coming back down below 50% network utilization and lowering the fees in a subsequent block. The base fee can increase or decrease by a maximum of 12.5% per block, so then it will take roughly 20 blocks or around 5 minutes for gas prices to 10x and 40 blocks to 100x. This example demonstrates how spikes in network fees can be smoothed out when EIP 1559 is implemented. Because the increments and decrements are constrained, the base fee difference from block to block can be easily calculated. This allows Wallet to automatically set the base fee based on the information from the previous blocks. The entire base fee is burnt, also known as given back to the network. This is to avoid a situation where miners can collude and artificially inflate the base fee for their own benefit. Now let's talk about the fee cap. This can be set by users who would like to limit how much they want to pay for a particular transaction. Instead of just paying the current base fee, a transaction with a fee cap that is lower than the current base fee, they will have to wait until the base fee is lower than the max fee set in fee cap to be included in the block. It is basically a limit order in market terms. Now let's talk about the effects of EIP 1559. Although this may not be the case with the development of arbitrage, the miners in the current fee system receive both the block subsidy reward and the entire gas fee. With the recent high gas prices caused by DeFi, miners collected more money from the fees than actual block rewards, even though historically, block rewards were always much bigger than the extra fees collected from transactions. After EIP 1559 is implemented later this year, the miners would only receive the block reward and the miner tip. This is also why most miners are quite reluctant to implement the proposal, suggesting to push the change to ETH 2.0. However, for us as consumers, predictable gas fees with EIP 1559 in place would be great. Wallets would not have to estimate the gas fees anymore, and they can just set the base fee automatically based on the information available in the previous block. This would simplify wallet users' interfaces. Let's talk about something really important now, that will be the ETH supply. With this new proposal, there's a possibility of ETH becoming a deflationary asset, as burning the base fee basically rewards the users of the network by making the ETH more scarce, instead of overpaying the miners. ETH would become deflationary if the block reward is lower than the base fee burnt. That would be the case, for example, during the recent DeFi gas fee craze where the network was constantly under heavy utilization. And with cryptocurrencies being more widely adopted, I don't see why this won't happen again. This is also one of the main reasons why Ethereum may be a good investment prospect due to this possibility. Now, why I say miners would be fine with this is because a new revenue replacement is quickly becoming available for mining networks. This is called MEV, Miner Extractive Value. Miners can take advantage of their place as arbiters in how blocks are packaged to front-run profitable trades. MEV is currently popular among DeFi traders, who bid up gas prices to secure their place in the block. Now let's talk about what is arbitrage. To explain this term simply, it is essentially finding an asset that has different prices in different markets, such as stocks and bonds, and purchase the asset in one market to sell in another, thereby profiting the price difference. Today, usually bots are used to do this. In crypto, there are currently over 300 exchanges shown on CoinMarketCap alone. Between these exchanges, there are large price distribution due to the imbalances in supply and demand, along with the mechanism for price discovery being operated separately for each exchange. Now, larger exchanges with high liquidity will drive the price, which leads to smaller exchanges having to follow them. But this process is not instantaneous. This is where the arbitrage opportunity arise. However, for Ethereum miners, the arbitrage strategy called MEV sees bots identify and target trades waiting in Ethereum mempools. The bots can use a few observed techniques to profit from the targeted trade. For example, a bot will find a profitable trade waiting in the mempool. Then it will copy that trade and up the gas price for its transaction. That way, a miner will package its copy trade before the original can go through. In conclusion, I personally feel like Ethereum will grow much further than the current levels due to the EIP 1559 proposal as well as Ethereum 2.0 when it fully rolls out. Please comment below if you would like me to go over the Ethereum 2.0, as I chose not to include it in this video because it has already been covered a lot throughout YouTube. That's it for this video, and thanks for watching.